about Sajith Pai. He's a partner at BLUME Ventures and has come out with yet another edition of the report, Indus Valley Report. Sajith, first of all, I'd like to congratulate your entire team for the view which you have formed and the approach you're taking to startup investing. It's just very research backed and data backed, and also one eye on the public markets, because now for family office investors, individual investors, HNIs, it is, the bigger picture. They have SMEs. I mean, we all know what's happening there. The public markets in a bull run, private markets coming out of funding ventures, PEs guys are coming back. So it's a nice, wholesome portfolio, or a thali of sorts, if I may say so. But you have looked at all the parts yourself in the report. I want to understand about the GDP part which you mentioned. You have done a very good comparison. The naysayers always keep saying that the improvement in per capita GDP is not enough, because we got a big denominator, and when will the absolute numbers actually start rising? Growth in GDP, all of that is fine. What are your thoughts on what does the comparative picture look like, and what are your thoughts on this argument?
Yeah, the contrast between the GDP and the per capita GDP is always glaring. And much like what people say about India being a land of contradictions, this is another of those contradictions that stare us starkly in the face. I think fundamentally, Ajay, you've said it yourself. I think there's a denominator effect. Until the numerator rises to overcome the denominator's challenges, until we get more and more people from the lower incomes into the middle income and the upper income fold, it's unlikely that we are going to see dramatic changes. But I think the direction is right, and with the GDP numbers that we're seeing, as well as the growth rates are underway, we're likely to see this. But I feel like if we don't look at the per capita GDP growth rates as much as we look, and that's the number I think we all need to kind of own a lot more and look at. And I would say fundamentally it's down to the fact that there are very few people who are really driving the consumption in the economy forward, which is a number that I've kind of indicated as around 30 million upper income class who are really driving. And that fundamentally is a challenge as when it comes to the Indian economy.
What's on tax to GDP? Where do you see that trending?
Upwards for sure, but not as fast as what we have seen in the East Asian tigers when you look at them in the late 50s to 70s, or China from 1980 to 2020, which grew at 9% GDP. And if you look at, for example, because the population was not growing as much of that flew directly to per capita income as well. Whereas in India, we still have, despite what we say, we still have the population growing. So even with a 6% growth rate, as we have seen, which is really stabilized at 6%, we are likely to see per capita income grow at 5%. And the challenge with India is much of the per capita income growth is now going to the smaller 10 to 15% of the economy. So fundamentally, we are all doing well, but not everyone in the economy is doing well. And that's the fundamental challenge with India.
A part of the India, I mean, there is clearly a lot of transformation happening. If you look at the tax filing data, a large part of Indian citizens are actually rising in the income, and that's why the tax filing data is improving a whole lot. But still, there's a lot of work in progress. What about tax filers? The very small class of people, minority, actually, some people call them.
Yeah.
Do you see that number with the government initiatives, especially on tax evasion part, much more better compliance, digitization? Do you see that number actually improving a whole lot going forward in coming years?
I do see it. If you look at the data over the last, I think, 7 years, we have seen direct taxes, income tax, which is personal income tax, grow up from 2.1% of the GDP to 3%. Actually, corporate taxes come down the other way, 3.9 to 3%. So both are at around 3%. But fundamentally, what we have seen is the number of filers has increased. The number of payers hasn't increased as much. So what's happening is a minority of the Indian economy is actually bearing the burden. Nothing wrong with it in a way, because all of us are earning well and we should share the burden of building the country. But I would say that trying to get more people and democratize the tax base would be a low-hanging fruit that's there for the government. Because what's happening is our overall tax to GDP ratio is around 17%, which is much lower than many of our peers who are in the mid 20s and upwards. So the challenge is that 11%, much more of the tax burden is indirect tax, and which is intrinsically slightly more inequitable than direct tax. So I think we need to sort these two ratios. I think a best thing to do would be to uh, democratize the tax base so that fewer people share the burden. It's kind of shared by a little more people, and I think a lot more people can afford to share the burden, and kind of improve the ratio between the two, direct tax versus indirect tax, and slightly move the tax as percentage of GDP into the 20s. Because if that doesn't go up, government borrowings will have to keep going up. So I mean, these are the two ways in which the government can adjust. So it's sort of maneuvering between these kind of key kind of base indicators that the government really has to kind of play.
You've also spoken very extensively about how digitization, digital public infra, and of course mix it up with Jan Trinity is actually aiding a lot of financialization in the country, and SIP data and number of demat account holders and all of that are a testimony to that. Do you see this strength gather pace, and does it appear like a much more structural trend?
Yeah, you raised quite a few kind of themes there. I think one interesting theme that we've seen is that today people like us who through our SIPs, there's about just over $2 billion that's flowing into the economy every month. Sorry, into the stock markets every month. The result of that, and overall about 35 to $40 billion goes into the stock markets. That's about 1% of the overall market capitalization. But fundamentally, what it has done is it has sort of counterbalanced the FII inflows. Today, earlier, there was a time when I was growing up, FII sneezed and all of us had a cold. Today, FII sneeze, FIIs take their money out, it really doesn't matter. The DIIs are there to kind of safeguard. Safeguard is a strong word, but kind of make sure that anchor the Indian stock market forward. That to me has been one of the most interesting themes out there, that the DIIs today balance out the FII actions. Uh, the financialization part that you've shared is absolutely true. We are actually seeing that the savings that are coming out of this top 30, 40, a million households really drive much of the activity in the stock market. And I'm happy to kind of double click into more details as you want. But this to me has been one of the most impressive themes over the last 5, 7 years.
Satish, I want to understand what's happening in the startup world, because now increasingly startups are becoming an asset class in its own way for Indian investors. The high net worth and ultra high net worth and even family office investors. I'm not even going in the direction of PE, VC. Of course, they've been investing for a very long time. So this startup universe is emerging as a asset class on its own. How are you looking at that universe? Are the valuations much more reasonable? Are promoters cognizant of the fact that there is money which will only come to them at right valuations? Is that consciousness coming? Because this will only make this entire ecosystem much more fertile for more deals, more money flow, and better companies getting access to capital.
Yeah. No, thank you for asking that, Ajay. I think the stock market's been on a tear, whereas on the private side, there's been a little bit more turbulence. So 2020, 21, like with all markets, we hit a high. About 42 billion, right, came into the Indian venture market. Since then, that's come down. Today, we are a fourth of where it was. I think the worst's over. We're likely to see it go up again this year, 2024. But 2023, we came down to, depending on which database you look at, $9 to $11 billion. So about a fourth of what it was 2 years back. Much of this was led by growth. If you kind of look at the venture market, it's divided into early stage, seed, which is where Bloom operates. Then there is early growth and late. Late would be like a SoftBank, for instance, right? A Tiger maybe. And they have really stayed away from the market. Multiple factors, one of which is that they've had challenges with their portfolio. Two is that they want valuations, and valuations were not as reasonable as they were today. So they might start coming back into the market. And so I would say on the whole, you asked about valuations, they've got a lot more reasonable. That said, it depends. Valuations in private markets are likely to be higher slightly, historically been higher. But today, I would say you even have situations where in certain sectors, the valuations in private are lower than public. And so it all depends on the sector today. It's difficult to kind of pass a full judgment, but overall, I would say valuations are far more reasonable. The challenge in the last 2 years has been growth capital, which is typically large checks, 100 million and upwards, has sat out of the Indian venture market. And until they come back, and the buoyancy in the Indian venture market is likely to be some distance away. I think that is how we have kind of unpacked the venture market really.
Before I let you go, just one word as an investor. I'm not even categorizing into startups or the public market. As purely as an investor, somebody who interacts with promoters and managements, and somebody who analyzes business models. The growth which India is seeing, and lately a lot of upgradation on that growth outlook has happened by many agencies. Does it appear that we are in for a good, reasonable high growth for a prolonged period of time? Because after all, growth is what? Made up of how corporate India, both in public and private, is actually doing on ground. Do you see buoyancy in businesses you speak with? Do you see confidence in them? Is it all adding up? The narrative versus numbers are adding up in foreseeable future in your view?
Yeah, we are a very optimistic end of the market as private investors, as venture investors. We need to be. So we are over optimistic, some would say. That said, even we've got cautious over the last 1 year. I would say that broadly. I would say so long as liquidity continues, so long as there is this broad buoyancy in the stock market continues, mostly anything that is to do with consumption, catering to the top 30 to 40, 50 million will do well. Where I'm a little more cautious would be that there has been a lot of, on the finance sector side, on fintech and financial services, I would be a little more cautious on anything that's to do with lending. Okay, that is because there's a certain amount of money that has gone into the economy, into what are called new to credit customers, and anything that is exposed to that side, I would be a little more cautious on seeing growth continue, on the kind of buoyant growth continue. I would be a little more cautious there. But when it comes to consumption of the top 30, 40, 50 million households, I don't see any fundamental challenges. I see that continuing. But when it comes to, for example, anything to do with the next, I would say like the bottom 50%, I would say like I'm not seeing the kind of tailwinds that have historically driven the Indian rural sector as well as the Indian bottom of the pyramid consumers ahead. I would still say that we're still seeing a K-shaped recovery. And I would say that I would be far more confident on anything catering to the upper end consumers.
Excellent. Very interesting conversation, Satish. Thank you very much for your time. And once again, extremely good work. It's a 100-page document, 100 sheets. Very interesting. I'll urge my viewers to go ahead and read it as well. It's there on the Twitter handle as well. But thank you very much for chatting with us today.
It's a pleasure. Thank you. Such a pleasure.